back, they're prorating the interest back to you as well that you're not having to pay. That it kind of washes itself out. Are you paying interest? Yes, it's not completely free. But if you look at the gains in relation to interest paid, that should be greater. You just bought a vehicle and made money simultaneously, or sent your kid for tuition purposes to college and made money simultaneously. Put a down payment on a property, same concept. It's endless. What I mean by endless is it doesn't matter what you're trying to use the money for. You can go utilize the money for another asset opportunity, make that dollar become two, because you have it sitting in two different arenas that's gaining, hopefully having gains there. You have gains now happening on two different dollars that came from one location, and you're not losing the earning power on that money. So the efficiency, the use of the money in terms of efficiency is so vitally important that we are not taught these kind of things. This is what banks are masters of. They understand how to take a dollar and make it work multiple times. Banks just do it by lending to you and then to me for different things: credit cards, car payments, student loans, what we just said, home equity lines of credit to get the equity back out of the property. And they all have different levels of interest rates that are attached to them. We're not taught how to be that center of influence like a bank does and make that almost like a wheel. You know, you have spokes that come off for a bicycle. The bank's in the middle, and then you have the spokes that come off. They're all those different things: credit cards, car payments, student loans, like I just said. Those are the spokes. We don't do that ourselves, to where we put ourselves as the bank in the middle of the wheel, and we have all these spokes that are coming off like I just described, but the money coming back comes back to us. Because if I borrow for my home and then you borrow for a credit card at the same institution,